Welcome to Kings and Queens Accounting class. It is my pleasure at this time to share with my students some techniques in managing your multiple choice examinations. I want you to give special attention to a few things. One is that whenever you are approaching a multiple choice question, the first thing to understand is the stem of the question. What is the stem of the question asking of you? Now, there are many times the stem of the question may be long, but you have to bear in mind the original transaction or facts of the stem of the question. All right? So the first thing to do in treating with multiple choice questions is to determine the original facts of the question or the stem that speak to the transaction. Secondly, in managing your multiple choice question, when you read the question, you should reflect on which area of the syllabus, which area in accounting is this question featuring. Once you have identified that particular area, then it becomes easier to interpret and to respond appropriately to the questions. All right? So now we're going to look at a set of questions in relation to multiple choice questions. Let's go. Now, the first question here says, a non-trading organization is mainly concerned with, and it gives the options. Now, what I want you to bear in mind here is that the question is speaking to, in the area of the syllabus, a non-profit organizations. All right? And once you can recall which area of the syllabus the question is asking you, then you can easily or best interpret and give the answer. So the answer to this question would be alternative D, option D, providing various services for its members. Let's look at the second question. The term accounting refers to, and it gives us a number of options. Use of information in making business decisions, the use of special ways of recording business information, recording, analyzing, and interpreting of business information, and the last option is journalizing, posting, and balancing of accounts in special books. Now, the answer that best fits a definition or a term for accounting would be option C, recording, analyzing, and interpreting of business information. Let's jump over to question 3. Which of the following are nominal? Which of the following accounts are nominal? Now, this area of the question is asking you now to determine, to remember types of accounts. There are real accounts, nominal accounts, and personal accounts. Nominal accounts speaks to what now? Expenses, yes, revenues, and capital. So that's what the question is asking. And therefore, for question 3, the best option for that question would be A, wages and rent, because wages and rent are expenses and nominal accounts are dealing with expenses, yes, revenue and capital. Let's go to the next question. Which would you consider land and building in a balance sheet? All right. Now, what they're asking you to determine whether or not you know and be able to identify the types of assets and liabilities. This question in testing your ability to classify assets and liabilities. Now, land and building, they are property, and property speaks to fixed assets. So the best response would be A, right? Best response will be A, fixed assets. Let's go to number 5. Which group of assets below is recorded in the order of liquidity? Again, this section of the syllabus is referring to how you treat with assets and liabilities, and therefore they're asking liquidity because in accounting there's accounts are recorded according to permanence or liquidity. Now, liquidity speaks to the asset that is easiest to be translated into cash to the asset that is least able to translate into cash. So we're starting from cash, okay? And based on the options presented, B would be the most appropriate answer: cash, stock, building, then land. One would ask, why not A? Well, we start with cash, but it is not in the order of liquidity because if you notice, stock is at the end. So land and building would have been more permanent than stock. So it would have been, so it is cash, stock, and then building, and then land. All right, let's move on to the next question. Item 6 refers to the following balance sheet. And they have now given us a list of a table with the assets and the liability representing the balance sheet. And our question is, what is the value of the fixed asset? What is the value of the fixed asset? What we have to do now is to identify the fixed asset, that is land, motor vehicle, fixtures. Yes, those are the 3 fixed assets in the question. They're asking about fixed assets. So it is land, motor vehicles rather, and fixtures. So we total all 3 fixed assets, and that will give us, that is the 4,000 plus the 8,000 plus the 2,600. And that will be the appropriate, when you add all of that, the answer you should get is 14,000, yes, 600. And that would be the answer for the question. So let's go to the next question, which says, the summarized position of Foster and Scott Limited at the 6th of March 2015 was, and this is asking us, what was the capital of Foster and Scott Limited? Now, in order to do that, we're being asked to use the accounting equation. That is, asset is equal to capital plus liability. So now we're seeking to determine they're asking us to find the capital. So we're going to substitute the formula. A minus L is equal to C. So we'll find the total of assets, total liability, subtract, and we'll get the capital. So let's look what they have given to us. So they are given to us the liability, current liability, and the long-term liability, and they've given us a fixed asset and the current asset. So let's add all our fixed assets. So the fixed asset would equal to 200,000. Yes, and the current asset is 100,000. That is, current asset is equal to 100,000. So our total would be 300,000. Right? Our total will be 300,000 for the asset. Then our liabilities now, current liability, it would be 60,000. Okay, and our long-term liability would be, our long-term liability is 150,000. So when we add that, this is going to be 210,000. Yes, so we're going to subtract the 210,000 from the 300,000, and that we're plugging that into the formula. We're going to be having what now? So we're going to have 300,000 minus 210,000. Yes, and our correct response would be 90,000. So the capital would be 90,000. So let's go. Do we identify it? Yes. So it is now B, 90,000. Let's move on. Question 8 says, if the following list of assets found in the balance sheet of a retail trader were to be arranged in order of liquidity, the sequence should be, all right. Now we're going to order of liquidity. We come back again to the order of liquidity. And what did we say earlier? We start from cash, which is the most liquid, to the asset that is least liquid. And when we examine, look at D. At D, cash, then bank, then debtors, then motor van, then fixtures, then building. And this is the D would have been the most appropriate response. Let's go to the next question. Item 9 refers to the following information about the assets and liability of Mr. Jones. Now look what we're asked to do. From the information above, we should find Mr. Jones' capital. We'd have done the same approach like the previous. Okay, so now we are going to identify all the assets, subtract it from the liabilities, and we'll get the capital. So what are the assets in this question? We have bank, we have inventory, and accounts receivable and cash in hand. So we'll add the bank figure, which is 800, the inventory figure, which is 400, the accounts receivable is the same as debtors, trade debtors, 125, and we'll add the 500. When we add all three, that will give us a total asset. And we have liability, bank overdraft, and accounts payable. So when we add the assets, subtracting from the liabilities, we get the capital. After you calculate, your answer should be D, 975. Let's move to the next question. A firm sold 50 items at $80 each. Of these, 9 items were returned. Which of the following will the firm issue in respect of the items returned? All right. So this question is testing you on identifying the source documents in relation to returns. Now, there are 2 source documents that affect returns, right? And there are 2 types of returns, return inward and return outward. Now, to identify what this is, you are to read the transaction to determine whether the item is referring to a return inward or return outward. Once you have identified that, then you can determine what source document is being spoken to right here. So it says a firm sold 50 items at $80 each. So the firm sold the items, yes, at $80 each. Of these, 90 items were returned. So if we sell the items, we're selling it to a customer. And therefore, if the customer is returning it to us, then it is returned inward. Whenever there is a return inward, the source document then will be what? Credit note. Because we are reducing what the customer owes. So it would be item B would be the most appropriate answer for that question. Let's go to the next question. A trade discount may be described as an allowance given. Again, now they're testing you in relation to your understanding of trade discount, cash discount, and the concept of discounts. Now, trade discount is always given to customers who are, 1, buying on credit, 2, buying in large quantities. So, let's look at what the response. A trade discount may be described as, and our most appropriate question would be D, a traders who buy in large quantities. Let's go to the next question. Our next question says, item 12 refers to the following information from the books of a company. And they gave us all the list of balances. And here's what they asked us to do. From the information above, what is the correct closing total for the sales? Now, there are 2 types of sale that any business can perform. One is cash sale and the second is credit sales. So let's check the list, see if we identify them. And right at the top, first 2, cash sales and check and credit sales. What we simply have to do is to add those 2 figures, and that will give us the amount, the total for the sales account, which would be what now? 55,000. That is the answer C. Answer C would be the most appropriate response. Let's go on. Which of the following would not appear in the cash book? This question is now testing you on how you know what you know about the cash book. All right. So which of the following would not appear in the cash book? All right. So we have a number of them there. Now, the concept of the cash book means that you are dealing with only cash and check transactions. Now, any item that does not conform to that, then it is going to be excluded. So which one there now? Look at B, goods sold on credit. Credit transactions are not recorded in the cash book, so B would be the most appropriate answer. Okay, let's move on. So now we're at the next question, on the 12th of January 2015, a merchant purchased goods amounting to $120 on the following terms: 5% cash discount if paid within 30 days. He settled his debt on the 28th of February 2015. How much did he pay? All right. Now, in this question that we are treating with, we are now being tested to treat with how to treat with cash discount, how to deal with cash discount. All right. So it is saying that the merchant purchased goods amounting to $120 and is given 5% discount. Now, he has a time period of 30 days to pay, right? He says the term 5% cash discount if he paid within the 30 days. So if he pays within the 30 days, then he will receive the cash discount. Now, what we have to look at is the date when the goods was purchased and the date when he went to pay the debt. So now he bought the goods on the 12th of January. Okay, so on the 12th of January would indicate that he would have had now 19 days there for the rest of the year, the rest of the month, 19 days, all right? And he's paying the 28th of February. So if you add 19 plus 28, that means he would have paid after the 30 days. Yes, he would have paid after the 30 days because he's paying on the 28th of February and he had only 30 days to get the discount. So therefore, he will still have to pay the $120. So it will be C. The appropriate response is C. He will not get the cash discount because he's paying after the 30 days. I hope you get that. So we look at when it was purchased. Yes, on the 12th. So how many days would have left in January? And we're saying that would have been about 18 or 19 days in January. Add 19 days with 28 days, that would have been far past 30 days. So he would not get the 5% discount. All right, so our answer is C. Let's go to the next question. When a proprietor draws cash and other assets from a business, what effect does it have on joins or capital? What effect? So you're asking now to determine in this question, what impact does joins have on capital? Okay, so, and one, capital is relating to what the owner puts into the business, and therefore if he's taking anything out, yes, for his personal use, he's reducing what he has in the business, so the capital is decreased. So the answer would be A. Let's go to the next question. On the 2nd of March 2015, a land brought goods on credit worth $630. He received a 3% trade discount on his amount. The invoice also stated 2%, 20 days, net 30 days. How much would Elan pay for the goods if he pays on the 8th of March 2015? All right. Now, in this question, they have given you some sale principles, yes, and some concept within sales. Now, that information that says the invoice right here, where it says the invoice also stated 2%, 3 days, net 30 days. What that is indicating is that if the person pays within 20 days, they'll get 2% cash discount. If 30 days have passed, then they will not get the cash discount at all when they're paying. All right. So let's look what the question asking us now. It says, how much would this individual pay for the goods if he pays on the 8th of March? Now, first thing, he's getting a trade discount. So you will find 3% of the 60,000 of the 630, and the difference from that, you will know that would have been what the Elan would pay, right? So if we go here, the cost, the list price is 630 times 3%. Okay, now when we do 3% of that, what is it? So it would be 3% of 630, yes, and then we multiply 3 by 630, we get 1,890 divided by 100, and we're going to get 18.9, which would be $18.90. Now, this is what they're taking off. The $18.90 they're taking off as the $18.90 as the trade discount. So to determine how much he's going to be paying is that you're going to have the 630, right? And you're going to subtract the $18.90 from that. And that will now give us how much would the customer be required to pay. So when we see here now, when we subtract the $18.90 from the 630, then $611.10 would have been the amount that the customer is required to pay. Now, we are told in the question that if he pays within 20 days, he'll receive a further 2%. So he bought the goods March 2nd, and he was paying for it. What time was he paying for it? The 8th. So in fact, he will get the 2% discount, cash discount on the amount. When we find 2% of the $611.10, we are getting $12.22. Now we are to subtract the $12.22 from the $611.10. And our answer, when we take the 611 and we take 12.22, yes, our answer is going to be 5.9. So we're going to get 598.88. All right, and so the answer, if we go over now, we're going to see B. So the appropriate answer is B. Okay, let's go to the next question. When money is taken from cash and paid into a bank account, the recording is referred as sorry, let me read that again. When money is taken from cash and paid into bank account, the recording is referred to as, all right. Question is testing about concepts in cash book, and the answer here would be B, contra entry. Whenever money moving from cash to bank and bank to cash, it's referred to as contra entry. Let's move on quickly. Next question. And it says ABC company deposited a check for $300 received from Mr. Murray. How should this transaction be recorded in ABC's book? All right, let's go to this. Now we go to the stem of the transaction. And I said earlier, what is the stem of the transaction telling us? It says that ABC company deposit a check of $300, right? So the ABC is depositing a check of $300 received from M. Murray. So Murray is paying us money and we are receiving it. So the bank is going to be receiving the money, yes, and of course Murray is going to be giving. So we are going to, the two item C would be 2 and 3 with the most appropriate response. All right, let's go to the next one. Which of the following is not a nominal account? Again, we come back to the same concept of nominal account, and we say it is nominal accounts is what now? Expenses, revenue, and capital. So how do we say any? It says, so all right, discount allowed is an expense, so it's a nominal account. Carriage invoice is a nominal account, yes. Commission, nominal, because commission has to either be commission receivable or commission payable, so it would fall in the category of a nominal account. But look at furniture. Furniture is not an expense, and it is not a revenue. It is what? A fixed asset. So therefore, it would be A. That's the one that is out. So A will be right answer. Let's go to the next. A fixed asset purchase for $1,000 is depreciated at the rate of 10% per annum using the reducing balance method. What is the value of the asset at the beginning of the third year? Now, the principle they're testing now, how you deal with reducing balance method. Now remember, with reducing balance method, you find the depreciation, the percentage of for the depreciation from the book value, not the cost of the asset, but the book value. How do we find book value? It is the depreciation subtract from the cost of the asset that gives you the book value. So what we need to do is to find 10% of the 100,000, and that will be the depreciation for the first year, which would be $100. If we take $100, from, let's do that now. So the cost of the asset is 1,000. With depreciation is $100, then the book value would be $900. So the next thing we are going to go to now is going to find the percentage of from the book value. 10% of that. 10% of that, this is the second year now. This was year 1, year 2. 10% of that is going to be $90. If we take $90, so 900 minus $90, we're going to get $810. So that now tells us that this is what the figure of the book value would be at the beginning of the third year. So let's go to the question. Yes, 810, which is the answer B. All right. A mechanic starts his business with $10,000 worth of goods. What entries should be made to record this transaction? So what we do now, we go to the original stem of the transaction. Look at it again, right? Let's look at the transaction. So it says, a mechanic starts his business with $10,000. Now, whenever you are starting business by putting in whether money or asset into the business, that is referred to as capital. So if you're starting the business with $10,000 worth of tools, then the tools is a fixed asset. So it is a capital. Two accounts affected. There will be the capital and tools. So let's see which of them would be appropriate. We would debit the tools account and credit the capital account, and that will be C.